I'm Ellis Martin. Join me right here, right now, on Money Talk Radio for a chat with Daniel Major, the CEO of Goviex Uranium. Goviex trades on the TSX Venture Exchange as GXU, and in the U.S. on the OTC as GVXXF. Goviex is a mineral resource company focused on the exploration and development of uranium properties in Africa. With a substantial resource inventory, Goviex's main objective is to become a major uranium supplier by exploring and developing its key projects, the Madaouela Project in Niger and the Muntanga Project in Zambia, both of which are forecast to be in production in this uranium cycle. Daniel, welcome to Mines and Money Miami. It's great to see you here, old friend.
My first time to this conference, and actually it's been pretty good, and it does help with uranium at $100 a pound.
And I'd like to see the equities catch up with that, and I believe that they eventually will, won't they?
Absolutely, and I think that's one of the key talking points presenting the companies in general, is that while uranium companies have done well, they haven't really caught up with the big surge in uranium price that happened in the second part of last year. And even now, they're treading water and really not following it through.
Well, I think as long as we keep spreading the word and talking about it, and I was just on a critical minerals panel about 15 minutes ago. We were talking about lithium, we were talking about nickel, we were talking about copper, and somebody on the panel, Eddie Sugar, magically brought up, as he should have, uranium. Why is that not on the critical mineral list? And it seems to me that's the answer for everything, especially with clean energy and ESG requirements and what have you.
But it is. It's actually on Canada's critical mineral list. It's on the US's critical mineral list. The UK, there's a number of jurisdictions that now have uranium on their critical minerals list. The one thing that I've also seen, we're talking back to the valuation side of it, is the number of analysts now upping their long-term prices. I've had 3 come across my desk in the last week who've all moved their long-term price up to $80 to $85, and their valuations have just jumped accordingly. So I think we're starting to see that beginning of, certainly from an analyst perspective, applying in the new prices going forward. I don't think we've seen the end of this uranium bull cycle. You know, you've seen some consolidation, but we're consolidating at $100 a pound. We've seen uranium go from mid-50s in the summer of last year to over $100 by the early in this year. Of course it has to consolidate at some point. It can't just keep going up on a rocket trajectory. The utilities have got to sit down and figure out what their buying strategy is going to be, because they will have had a buying strategy at a lot lower level, and they've now got to change all of that and figure out how that works through both their budgeting but also how that plays through into their power price.
Now, you mentioned consolidation, and really the equities have just not caught up with the price as it is at $110 or $120. I haven't looked today, so I don't know the exact figure. But if there's a contraction or a consolidation, as you put it, to $80, which is darn good and extremely legitimate, especially compared to just a year ago, less than that, is the market going to view that negatively?
The consolidation's around 100. What I'm saying is the analysts are moving their forecasts up. So most of the analysts were using $65 as their long-term forecast for their valuations, now all moving them up. So we've got analysts moving their net present values and share price valuations up almost double from where we are now on a lot of stocks. In Goviex's case, like 4 times up from where we are now. So a massive uplift is coming through. And I think that issue hasn't been priced into the stocks. We were starting to price in $65. We're definitely not pricing in $100.
We see a lot of junior activity in the Athabasca space. Many companies, or shall I say, more companies than before, and we'll see continued growth in that area with exploration and development. Exploration and development, I'm not claiming production, and this is where perhaps the big difference is between a company like yours operating in Africa as opposed to exploration and development companies that are operating in Canada at the moment. Let's explain the difference and why, if you're looking at jumping into the uranium sector, and now I'm talking to those that are not in uranium right now that are in our audience, and why they should consider it and a company like Goviex.
Oh, absolutely. I mean, I think a couple of things. One of the things that's come to me for a lot of the analysts coming back and feeding back and fund managers has been a strong run that you've seen in the big players, your Camecos of this world. But the developers, like our own, have not really run at all. And there's a lot of catching up to get through from that point of view. But yeah, I mean, that's always the second round. The companies that are going to be building stuff, the companies that are going to add production to the pipeline are the ones you want to be investing now. Because those are the ones that are effectively leveraged to the uranium price itself. That's what changes their cash flow. That's what changes their economics of their project, makes them more doable and more economic to build. Uranium price makes no difference to an exploration company. They can carry on exploring, but at the end of the day, now it's the time for the developers. You may look at the explorers later in the process.
What is the plan when you go into production? Are you going to remain the producer, or are you looking to partner with one of the majors, maybe Orano, maybe Denison, maybe Caneco, and a bunch of maybes right here?
At the end of the day, we're working in the African scenario, and none of those three are particularly working in the African position. So there are alternative partners out there. I mean, there's the Chinese, for example, who are desperate to find uranium out of Africa because they rely heavily on Kazakh material. And if you look at Kazakhstan's forward production curve off their IPO document, they're pretty well peaking out already and are going to need a lot more uranium to drive their demand, which is quadrupling over the next 20 years. So Africa's a place that the Chinese companies are going to be looking. With something like Muntanga, we can do it ourselves. It's a really low capex project and a high returning project. That one we can move forward straight forward. We've got our Nigerian project as well sitting out there. That one's obviously paused from a point of view while we waited to see where the politics were going to end up. I mean, it was very restrictive with the sanctions on us. Our understanding is that those sanctions will be lifted very soon, in which case we can start on that forward trajectory on Niger as well. And the point I'm making from a value point of view here is that if you look at our two projects at $75, they're each worth about $350 million each to $400 million. Well, we're trading at $120 million. So you're getting Muntanga at a deep discount. You get Niger for free when you buy Goviex's shares at the current price.
I guess in the scheme of things, that's really all that matters, especially to a generalist.
Oh, absolutely. Absolutely. And the underpin, which is that price. And another anecdote I'll give you, I was at Indaba recently, talking to the debt side for Zambia, already starting to prep ourselves. But we're starting as well to see an increasing number of people come back and relook at Niger as well, because it's a very different place to be looking at Niger at $100 uranium than it was when we went out on the debt market previously at $55 uranium. With regarding Muntanga, that's a very easy pitch, and we had a lot of people very interested saying, right, when you've got the FS out in the summer, come and talk to us. We want to have a look at it.
When do you expect to be in construction?
In the case of Zambia, finish the feasibility study this year. We'll be out looking for the debt for that project. So we'd start construction next year with first production coming out early 2027. In the case of Niger, then obviously following a similar pipeline, but we'll probably start doing some low-level construction now to keep in line with what the government's looking for, while we are going to be looking at that financing already. So we've already been engaged with the lenders, and they're telling us to start getting on with the due diligence process that's going to be required for this. So that's a major step forward, and we'll start to accelerate that. The nice thing for us as well is that Global Atomic has got very similar lenders to us. So a lot of the things that they are going through to pull their package together, we can basically repeat straight off when we go in with our own.
Well, I would say, and we're not making any recommendations because I'm not allowed to do that. I'm biased and neither can you, but I would say that potentially your company at 15 cents US might be worth taking a look at.
Absolutely, it's definitely worth having a look at. And from a risk perspective now, that is such a low risk investment. I looked at one of the analysts came out, and I won't say who it is, but they put a valuation out for us target at 70 cents. So, if you only get half of that value, that's a double.
Well, Daniel Major, it's always good to see you and chat with you. Thank you so much for joining us today here at Mines and Money Miami.
It's been a pleasure, and it's been great fun. It's been a great conference. Thank you.
I've been speaking with Daniel Major, CEO of Goviex Uranium. Goviex trades on the TSX Venture Exchange as GXU, and the U.S. on the OTC as GVXXF. The company's website is goviex.com, Goviex.com. I'm Ellis Martin, and this is Money Talk Radio.
Subscribe to Money Talk Radio. It's free. Go right now to ellismartin.com.